Welcome, guys. I'm gonna be showing you guys how I entered this trade on Friday, right? So I showed you guys earlier that I have a setup on GBP USD, but market has not gotten to my setup. So I don't panic. I just wait for the market to come to my setup and I do my thing, right? So the same thing happens here. So I wait for market to come to my setup. So I have a setup here, and market came to my setup. Then after coming to my setup, I wait for my strategy now. So this is where I wait for the strategy to pull up and push down, create the first inducement, come up a little bit. Maybe sometimes it will just come up around 50% or 90% and come down, sweeping the inducement, and we'll start buying. So I have this trade running right now, and I think before the market closed, I'm already on profit of $100. So now I'm expecting to like make close to around $900 from this lot size I'm using. So you're gonna be seeing the thing on my video. I'm gonna be posting it on this video. So right now I have this trade set up, triggered, and right here I'm already making um $100 plus. That is, each position is giving me around let me say $10 or $11 right now. So now this is how I cut this setup. You can see, you already see my setup, you already see my lines, and you come to understand that this is the same pattern of what I do every single time. So now the first thing you need to like understand, or first thing you need to like notice whenever you come to the chart, is knowing the directional bias, where the market is facing and where it's planning on going to. So now this is what we have here. So if I should zoom right now and zoom this particular chart, what do you understand? You understand that GBP JPY has been facing bullish, like it has been a strong bullish momentum, back to back hits. We are going bullish. So now after then I confirmed what, if you look here now, you think that this is a structure shift to the downside, that we are about to like go for a bearish kind of move. Yes, it might move a little bit, but it's not moving in the directional bias. So the directional bias we're having here is bullish. So anything that makes this market push down against me on this particular zone, it means that market is gonna be still respecting a key zone beneath this place, right? So I don't know if you guys can see. Let me put it to the middle. I said anything that made this market push down further to this, around this zone, if it takes out this place, then it's, if this market have not taken out this low, it means we are still bullish. But if market takes out this low and still push down and take out this low, that is when I will declare it a change of structure. Why? Because if I should mark out this zone and this zone right here, you come to understand that the pattern playing out here is the same pattern playing out right now. All right. So now this is a two candles from the weekly time frame. So if I should mark out this zone here and mark out this zone here, you'll come to understand that we have just two candles in the weekly set up right here. It means from the 2 weeks gone, like the previous 2 weeks on, we are still bullish. So the next previous week, which is this week's we are into right now, supposed to continue this bullish momentum. That is what it means. So now after then, when I confirm that this 2 weeks is still bullish and we are expecting a key zone from the last 2 weeks, and we are expecting this new 2 weeks that is coming up right now to still continue. So now what do you notice after the previous 2 weeks was created and respected? So what do you notice? Market did not take out this high. So anything that makes this market not to take out this high, it means we are still bullish. And what we need to be doing is checking out for a particular zone to like take another buy to complete this bullish move to the upside. So now what did I do here? What I did here was that I marked out this key zone and this key zone. So this key zone now means if I should check it from the daily time frame, this is a two candle from the daily time frame. This should be actually Wednesday and Thursday. So right, so I have this Wednesday and Thursday, and by Friday, on Friday, so this is 4 hours. Now this is how to calculate and check it. So you come to understand 6 candles makes up one single day in 4 hours. So you come to understand that this is 1, 2, 3, 4, 5, 6, right? So this is 1, 2, 3, 4, 5, 6, and 6 now we are resting here, and the 6 candle was able to like close bullish. So it means that the next day, or we suppose from the next day, we are supposed to be going bullish. So that is what it means. So now what do you notice here? Market closed bullish from here. That is when I started looking out for my setup. So now what did I do? What I did here was that I start to look out for a particular move around here. So what can we call here? You can't understand that markets pushed up here and retested, came back up and broke it, came back again, broke it. Then we are now back on that same zone. So now what can we call here? We can actually call this particular range to, we can actually give it this name, which we can call a resistance turn to support. So now market turn into a support ground right here, stopping here and respecting it, giving us a candle that can actually strike this market to the upside. So this particular bullish candle with that wick right here, we call it Maribozo. This is a Maribozo candle, and this particular candle can actually strike this market to the upside. Like we can go massively to the upside, taking out even this high. So what I'm going to be doing is, if market should like take out this high and still keep moving on a strong momentum, the only thing I'm going to be doing is breaking even from here to around here and still make more money, because I still have a key zone here to take out. So now, after confirming that we have a Moribozo candle on this particular range right now, I jumped down to the lower time frame. That's my middle time frame, to check out to see what's happening. So on a 1 hour time frame, this is a 1 hour time frame. So on a 1 hour time frame right here, you come to understand we have a consolidation happening around here. So it's not giving us a clean setup. So now from there, I jump down to the 15 minutes because I need to see this clean setup. I want to like make it quick. I want to like make the video real quick. So now you understand that we have this last lower high right here. So do we have this lower low, lower high, lower low, right? So here is now is counted as shifting structure, like a sweep of liquidity, sorry, and market shifted structure right there. So what do you notice? After shifting structure, we have the first pullback. So this is the first pullback I always show on my video. So I have this first pullback. Why is it first pullback? It pulled back, but was not able to like take any key zone as his favorite key zone, or take any zone from there to buy this little buy we have here, to like use it in buying this trend. So now what did you notice? After having this first pullback, then that was when I marked out a key zone just beneath the liquidity, right? Because market respect, after taking out the liquidity, we can see a massive strike to the upside. So that was why I marked out this other block or this range. So because if you go to the higher time frame, you understand that this range is actually one particular candle. So this is a key zone, and now I marked it out. And what do you notice? Market came back inside that point, taking out this inducement. Right now, we're having a nice candle to the upside. A very clean, simple setup. So that was what I have on GBP JPY. And with this, I believe you can actually find the directional bias with the simple tips on how I said it and how I started from the higher time frame to the lower time frame. So that is how we make money from trading and how simple it is. Thank you for watching, and make sure you follow me up. I do.